What's going on, guys? In this video, I want to give you guys that simple yet very, very effective scalping strategy for futures. One that you can even implement trading the NASDAQ 100. So I know a lot of traders are a little hesitant or standoffish, especially in this market cycle where the ranges in the NASDAQ are very extreme, right? For example, you can just look at today's price action. This one particular candle was 163 points worth of range. So makes things very, very difficult when the range is that much trying to manage risk. Now, the one thing that I can tell you, okay, from many, many years of experience now is you never know and you can never predict which setups are actually going to work. You can never predict, what's the range is going to be today. Is it going to be extremely volatile? Is it going to be a lot more choppy? Like, I can see traders today saying today's a very choppy day, right? I got chopped up. And the question is going to, it's going to arise. It's why are you getting chopped up? Okay. Is it because you're looking for too many points? Are you looking for 40, 50, 60 point moves, right? Is the market giving you that? Is your entry a little bit closer to breakout, right? So are you chasing a move that's at high of day, low of day versus trying to get in at a level of support or a level of resistance, right? Depending on if you're going long or short. I want to kind of show you 3 trade setups today using this very simple yet effective trading strategy where you guys can use a 5-point take profit. Okay. Now for me personally, I trade one mini contract. Okay. One mini contract. Sometimes if the market, I'm feeling myself, I'll put on 2 mini contracts, but again, it's not often, and it's going to have to be after I'm already green on the day. Okay. So with that being said, if we look at the first setup, right, the first real setup that I'm looking at here, 6:35 in the morning Pacific Standard Time, this candle not only loses the 20 SMA, but touches this lower support zone here. Okay. It's a little hard to see on my screen, especially if you guys are not inside of Evolution Traders where you guys have all of these moving averages on your screen or know the concept behind it. That's okay. Just kind of follow along. Once we lose this 20 SMA here, 6:35 in the morning. Now, again, before we even get into these plays, I have a very firm rule, and this is a rule for myself. You can alter this rule. You can do whatever you want. I take no trades inside the first opening 5-minute candle. Okay. So if we get a setup that happens in the first 5-minute candle, I will ignore that. Just due to the fact that normally right off the open, price tends to be extremely volatile, goes up one way, down another way, and then there tends to be a lot of fake outs in that period of time. So I will look for setups, and sometimes I alter this as well, depending on, using my common sense. Sometimes I've sat out 30 minutes of the market. Sometimes I sit out 15 minutes of the market. Right now, I'm in this routine of never taking any setups inside the first 5 minutes. So for example, the first 5-minute candle closes over the 20 SMA. I'm going to ignore it. I'm going to act like it's not there. That's because I don't want to be involved in a trade right off the bell. Okay. So I'm going to be waiting for the second setup of the day. Now, the second setup of the day just so happens to come on the second printed candle of the day. That is a short setup. Again, ranges are very big. It's a 60-point range here. You have to trust your strategy. When you're dealing with a strategy like this, where you're looking for very quick scalps, I call it getting in, getting green, and getting the hell out, right? When you get into a strategy like this, you're going to hit at a very high win rate percentage. I'm talking 70, 75%. Where traders get into trouble is on days where there's not a lot of setups and they start tinkering around and taking this setup and looking for that and trying to bounce it here and trying to go short here. You screw everything up. Take the setups that come to you, and when you're green on the day, whether that's after 1 trade, that's after 2 trades, that's after 3 trades, call it quits. Have a little self-control to pull the plug. Okay, so on this second setup here at 6:35 in the morning, we get this breakdown that stops right here at this linear regression. At 6:40 in the morning Pacific Standard Time, we get a confirmation you get more than 5 points. I don't even need to do the math here. It was a 74-point range candle. You could have taken this for 5, 10, 15, 20, 30 points. For the sake of this video and for the sake of how I do things around here, 5 points was a very easy scalp for me to get in, pick my spot, and get green. Now, once we put in this low and we start to chop around for multiple candles, you can see here we put in a low, we kind of chop around, we sweep, no continuation to the downside, and then we get a very aggressive candle back pushing up to the upside. We get our second setup of the day at 7:05. So at 7:05, we close over the 20 SMA. We're looking for the following candle, okay, to confirm. And when that confirms, we're going to get in on that active candle to the long side, and we're going to look for our 5 points. And you can see here, you could have taken 5, 10, 15, 20 points. But for the sake of the video and for the sake of the way I do things, that's 10 points from the between the first and the second trade that are locked in. And if you're trading one mini contract, you're up around $200 at this point in time. Now, this candle here came out of absolute nowhere. Okay, this was a 163-point candle range. I was kind of sitting around being patient. I was looking for something, and then all of a sudden we started to sell off. And I was like, what the hell's going on here? We started to sell off a little bit more. The low price of this candle went to 18,750. Excuse me. Yeah, 18,587 was the low of this candle. It was a 163-point range. And the next candle went down to 18,576. Okay. So even though it was a 163-point range candle, one could have an ATM strategy to get in on the confirmation when we confirmed the low, because this is the first candle that closes below the 20 SMA. Okay. You could have a hard take profit at 5 points and you still would have made money. This is trade 3. However, I did not take this trade. Okay. I didn't take this trade just because I wanted to use a little bit of self-discipline here and not chase a candle that was down 163 points. So I wanted to wait for another setup. So I let this one go. Again, still at 2 trades on the day here. The third trade that I was looking at, I was looking for, once we started to bounce and we started to get back over this 20 SMA, I'm looking at initial low of day. Okay. I'm looking at a bounce. I'm looking at a washout, but I'm looking at a higher low. So we never take out the low of day. So when we put in a higher low, and if we do get back over this 20 SMA, I would be more prone to taking that long position because I'm trusting that the day's trend is going to hold. Now, sometimes trusting things that you see in the charts works out, and sometimes it doesn't. In this particular case, you can see at 8:50 in the morning, it works out. We get that closure. That high price was 18,695. And at 8:55, we not only confirm, but it confirms for a 43-point range of a candle. Okay. So those are 3 trades, 3 for 3 on the day. I've got to tell myself, let's not press the luck. Is it the best price action today? No. Did we get some valid setups that we could have made some money on? Absolutely. So regardless if the market washes out 200 points into the closure or it pushes up 200 points, I'm willing to let that go to trade another day to keep the lights on for tomorrow and lock in and protect what I've already made. With that being said, this is a very simple strategy that you guys can use on a day in and day out basis. Regardless if you trade the NASDAQ, you could use it on the ES, the RTY, the YM. You can use it on stocks. You can use it on whatever you choose. You just have to work out those risk to reward ratios. So for me on the NASDAQ, I'm looking for anywhere between 5 and 10 points, typically 5. I'm risking a hard $250, $300 loss per trade. Depending on the market and where my supports are at, I might give it a little bit more wiggle room, or I might cut it a little early. Again, those are things that you have to work out. All I can speak on is what's working for me. Okay. The setups don't change. What changes with the individual trader is how much are you willing to risk. You might have a trader who's comfortable risking $1,000 per trade, and you might have another trader who's comfortable risking $100 per trade. So how you can adjust that is by the number of contracts. If you're only comfortable risking $100 per trade, well, then you're going to automatically know off the bat that you can't go out there and play one mini contract. Maybe you should be trading micros, maybe 4 or 5 micros. If that's too much risk, then go to 2 to 3 micros. Again, if you're making $30 to $50 a trade trading a handful of micros, that's still good money. You should still be up close to $100, $150 on these 3 potential trades if you're trading, multiple micro contracts. So again, you could have a trader who likes to risk a little bit more. They've got a heavier size account. They've got a heavier risk appetite. They can definitely put on 2 or 3 mini contracts, and maybe necessarily they don't need to take 3, 4, 5 trades. They can take one trade, whether it wins or loses. That's their one and done trade for the day. So again, everyone wants to have this cookie cutter system that is going to be a one size fits all for all traders, meaning you can take this strategy and trade 1 micro and everyone's going to be okay with that. The harsh reality is everyone's not going to be okay with risking $300, $400 per trade, right? So how do we use this system? How do we use this strategy and make it okay for everyone? It's adjusting the risk on the number of contracts that you're playing and the size of the contracts that you're playing. There's traders inside of Evolution Traders who are making great money, $200 or $300 a day, taking 3, 4, 5 trades a day, who are trading 2 and 3 micro contracts, and they're looking for 10, 15, 20 points, right? So again, what I'm doing might work for you, but you can use the strategy and tailor the position sizing to work for you if the way I do it doesn't. Does that make sense? So again, just because I'm doing a $250, $300 stop loss and I'm trading 1 mini doesn't mean that you can't do this with a 10 point, 15 point take profit, but trading 2 micros. You see what I'm saying? The parameters for entering the trade don't change. We're looking for short-term intraday change in trends. That's when price action is previously trading below the 20 SMA, now crosses over. And we get a following candle to confirm that, and then vice versa to the downside, right? So I hope this video finds you well. I hope you guys all have a fantastic week trading today. If you guys want to trade with me, make sure to click the link down in the description box below. Also, guys, a couple more days for the 80% off sale for Apex. Again, if you are a funded trader, I definitely recommend you always need to actively be working on your business and growing your business and scaling your business. You need to actively be trading and taking evaluations. For example, right now I'm trading 7 funded accounts with Apex, but I'm actively working on 2 more, right? I constantly want to be working on more evaluations. If you are not funded, and let's say maybe you have 1 or 2 or 3 evaluations, well, Apex allows you to have 20 funded accounts. You should go out there, take a number that's comfortable for you. Again, only risk what's comfortable for you. But at $35, a $50,000 account, you can go take $300 and go buy 10 accounts. With $300 should give you a good sense of judgment on, what works, what doesn't. Trade a few a little bit higher risk, trade a few with a little bit lower risk, but constantly try to pass these evaluations as quickly as possible. Again, you don't want to take 3 or 4 or 5 months to pass an evaluation. I believe getting it done in under 30 days is great. That way you save on the monthly billing cycle and you can kind of just get into, starting to attempt to make real cash. Definitely go that route. I'll see all of you guys on the next video. To those of you guys who are going to join Evolution Traders, I'll see all of you guys inside the community, and make sure to click the like button. Make sure to subscribe to the channel. Leave me a comment. Let me know how you guys did today, and I'll see you guys all next time.